The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. A beautiful November 21st at the headquarters of Technical Trading and Investing at TFNN.com. And we've got an expiration date that's giving us the kind of expiration that you get at least a little bit of action out of this marketplace. It's always been one of these where you have to think, what's going on out here? But getting a little bit of reaction. Hopefully we get something going here. I've got a few things going on here with technical difficulties, so hang on. There we go. There we go. As always, we like to take a quick snapshot of what's going on in the markets. So today, the S&P cash up, let's call it 9 points at 2061.73. The S&P cash, the NASDAQ up 13 points, and the Dow Jones up 87. And what can you say? It is an expiration day. We did go up and tag the 2070 level. I've been thinking that that was kind of the upper end a couple of weeks ago. I thought we were kind of stumble up to that by the end of the year. We're probably a little bit ahead about that. Of course, it is options expiration, but a lot of people still very short from the pullback down to 1822. And I suspect what we saw today is probably the last few of those folks starting to cover. But a lot of individual stocks that are short, and I think we're going to see light volume. I mean, we've got 2.3 billion shares today so far on the New York Consolidated Tape. That is pretty much a good day, especially for options expiration. I think part of the reason is that it's going to be a very short rollover period. Monday and Tuesday after the monthly expiration is normally a time when you get a lot of movement. What we do have is going to probably be an accelerated and vacillating Monday with probably some decent volume, and then probably no volume Tuesday and Wednesday. It's going to be very difficult if you're sitting on a short position to get a lot of people to start selling going into that long weekend unless they're in retail. But you can take a look. Anyway, you can always call me at 877-927-6648. That's 877-927-6648. And I appreciate your calls if you have anything of general interest today. And I digress. So let's get right to the news. Always a day where the market, for the most part, is bullish throughout at least the history of the U.S. stock market. The Standard & Poor's on this day in 1985 closes above 200 for the first time, finishing the day at 201.41. It's taken the index more than 17 years to double from 100 to 200. And that's really where it started getting going. And, of course, a lot of that had to do with a little thing called Silicon Valley really starting to put a fire under the stock markets and, of course, the entire economy of the United States. We had been in the malaise for what? Probably about 8 years. And about 1982, 1983, all these companies really started to go from being kind of out there to being mainstream, like Microsoft and Intel and a lot of the other ones. And I think it was still a year before Microsoft went public. But a lot of these companies really getting fired up. Oracle. This was a kind of a golden time, and I think a lot of people were looking forward in time to see some of these stocks become the BMOS that they are. But this is not the only one. I think in 1992 there was another giant milestone almost on this same day in the S&P. And so you see pretty regularly that you get some big days where you break new highs out in the fall. Generally a bullish bias throughout the end of the year, even if it is a minor bullish bias. Of course, probably one of the bigger stories out here today is BID, B-I-D. We've had a lot of activism in the markets, at least big investor activism. And of course, what we see is the CEO of Sotheby's. I got to say this right. Sotheby's. Oh, Kip, we're going over to the Sotheby's. Anyway, the Sotheby's, the big auction house in New York, the CEO is stepping down, and of course they're going to be getting a bunch of independent people on the board, and a variety of people still in this. Up $3 today, probably one of the bigger movers out here. But you always wonder, was somebody sitting on a ton of 40s and just waited until they became nothing yesterday and decided to go ahead and buy them? That would be very interesting, wouldn't it? Someone always knows something out there. But anyway, a lot of stuff, a lot of cross currents in the market today. Let's take a look at some of the other ones. But probably the big news of the day, of course, along with the huge pop we had early in the morning. But like I said, not at this point it becomes much tougher to start making a bear case until the end of the year. I had been spending most of my time last day or so writing the Tech Insider. I had kind of the kernel of an idea. And I think this was a 10-pager out there today. But the kernel of my idea is that I think I see what's going to happen in the near future. And as many times as I said on this show, I like to wait for the hanging fastball, the fat pitch. And there is a great deal of that going on. But I have a feeling we're going to have to wait about another 30 days to get to that, maybe 40 days. And I see it setting up all over. I see historical things in the 1906, 1907 panic, and I'm going to be looking to play that. I have a feeling we're just around the corner from some fairly big cash. Autodesk came out with earnings, beat Q3 estimates by 3 cents, beat on revenues, guided EPS. Below consensus, company raised billing growth and net subscription. Basically, what this is all about is that Autodesk has changed a great deal of what they do to a suite of programs, much like Word, Excel, and basically Office Suite from Microsoft, and turned it into a lower dollar subscription service. And it's kind of worked, but yesterday they were down a little bit. Nice pop up, a real sign of strength. Volume certainly increased. You would have liked to see a little bit more volume out here, but again, I suspect that it was probably good enough between now and the end of the year. It's going to be real tough to get a lot out. Ross Stores, who's been just on fire since pretty much midsummer. I'm going to call it midsummer out here. This July 17th low at 61.83. And of course, if you've never been in one of these stores, I think it's TJ Maxx and some other ones, they've just been doing an extra good job. I still like Steinmart down here much better than Ross Stores. They just never seem to have anything that really applies to me, but maybe it's the store I go to. But certainly Ross Stores is capitalizing, especially a lot of these high-end retailers that can't sell their goods, those goods end up at Ross Stores or a company like Steinmart down here in Tampa that I like. And you buy stuff basically 25 cents on the dollar that it was 6 months or a year ago in the same season, and for guys, it's not like I got to be too trendy, you know. I'm kind of a regular guy, as they say, a dude, drive my big pickup, gonna go ride dirt bikes this weekend, kind of a rough and tumble kind of guy, and I don't think I have to crash too many runway parties in New York City. Not in my wheelhouse, as they would say. But anyway, Ross Stores does a very good job of picking up the stuff that they may sell at a much lower price, and it's been a successful thing. But certainly the kind of move that you would like to see in here, and of course, with people not spending a lot of money on clothes anymore, especially teenagers, you know, I think they're getting a lot of inventory at a very decent price, only to go back and make some decent money on it. These stores tend to be highly cyclical, so I would be watching probably for some kind of high out here and for a pullback. But also, you can make a fairly decent case that this may be a long-term high in this company, and the reason I bring that up is there are three major gaps out here, and I think, if I'm right on this, hang on just a second. Go back and look to ROST, R-O-S-T. Yeah. There was a bad tick out here this morning on a great deal of stocks, and a lot of these are wrong. There's going to be a gap, and a fairly large gap back in here. In fact, let me take a closer look to see. I'm going to look at time and sales real quick to see this. Okay. Yeah, there was some bad ticks out here. So really this thing's about 87 to 89 today. So a fairly narrow, oh, here it is, day's range, 88 bucks. There we go, was the real low. But there are a lot of bad ticks that haven't made their way out of systems yet. So just know that this is going to be a three-gap play out here on Ross Stores. I'll call the data company tonight and bug them. But normally they don't fix this stuff till the end of the day, so they don't mess up things twice instead of just once. But that should set up what I think qualifies for a three-gap play out here. That means that you would probably see this thing come back into the $60 range over the next 6 months. But if this thing starts acting weak in the next couple of weeks, I would be watching that very, very closely. What else do we have out here? Oh, we're going to break. Give me a call at 877-927-6648. That's 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, take a quick look and see what we have out here. Kind of hit a high. We're off. We're up 7 points on the S&P cash, 2.4 billion shares. So a little bit of action on an expiration day, probably not too far off of where we're looking at. And we'll have to see just how this thing all wraps out. What else do we got going on here? Let's go back here. A few ones. Had Autodesk, Hertz, new CEO at Hertz, HTZ. Nice pop in this one, but it looks to me like probably a bigger ABC down. HTZ, of course, huge problems. In fact, I think we had a caller or someone emailed me that worked there and said that they were kind of treating their employees rather poorly and were wondering just how far this thing would go down. Nice pop today, some decent volume. August 19th was the last major high at $31.61. Got down to $18.50 on October 15th and has now bounced up to the high today at $24.31, 15 million shares. So not bad out here, but it is problematic to keep an eye on this and say that maybe what we are looking at here is just a standard retracement. A 50% retracement would take this to what, $25 and was that 58 cents, 75 cents, something like that. So maybe if I put on my glasses, I can see. 2606 would be a 50% retracement, and we've got just a little bit more to go that way. So we'll keep an eye on that one, but not a whole lot happening out here. Of course, clothing business is hit or miss. GPS kind of came back from the dead after a while. Now it's in this bigger trading range that it's been in here for a while. Closer, it had some bad news. I think this was, I think same-store sales were horrible or something back on the 9th of October. It came down on 31 million shares. It came back, filled most of this gap, and now has pulled back on fairly decent volume today. But you still had that high volume low back at October 16th at $35.46. Just under 8 million shares, and you need to really get back into that and test it before this thing is out of the woods. Mattel, not a big deal there. We talked about bid. Let's see what else is on me. Splunk, SPLK. Had some good news out here. If anybody plays video games or your kid plays video games, you would have seen the name Valve. Think of Valve as the cloud system in back of the game that takes care of making sure all the players can talk to each other, the switchboard, as it were. But also it keeps score and makes sure that some players don't cheat, which is enormously a problem in most of that market. So you have to kind of really keep an eye on that. But nice pop out here on being selected by Valve for that. And, it's not uncommon to see these stocks do this, of course, on expiration day. There's always the good word or the nice thing that happens. Splunk did come out with earnings, beat revenues above consensus, 1 cent higher on revenue, estimates, 1 cent better on EPS. Target raised, and a little bit other stuff. But I have a feeling that most of the juice out here in this stock today was because they picked up Valve as a major company. If you're not familiar with Splunk, it's kind of the name is kind of a play on spelunking, going into mines and caves and figuring out what's inside there. They do a lot of data analysis, and with the data analysis, they can go back and figure out how to advertise to your customers and other things. But every time I'm on one of these sites and play a game, when I get done, all of a sudden something pops up and tells me about the big sale this weekend on a particular game, or you can play it for free this weekend, or they always give you just a little bit of, how can I say, give you a little bit of a pat on the back and a coupon on the way out every time, if I can say it that way. We'll be back in a minute. Some commentary on Uber and Lyft when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. Someone's saying, don't see me in the den. Well, it's because I'm in the studio here. I don't know what's going on here. Let's get rid of that. Let's turn that off. Let's turn this back on, hit that, and do this. Hopefully everybody should see everything. What else do we have? Oh, we were looking at Splunk. I wanted to talk about Lyft and Uber. Hang on just one second. And if you missed it, well, of course, we're going to be talking technology all through the 4 o'clock hour. In the next hour, we've got Steve Rhodes that is going to be filling in for the first hour of the Tom O'Brien Show. I will be in the second hour. We're going to have Andy Heck talk a little bit about commodities if he can make it back. He and Tom are at the... He and Tom O'Brien are at the Money Show. Is it a Money Show? Invest, yeah, something out there. But anyway, if he gets back home, he's going to call in the first 10 minutes and kind of update us on what was a lot of action in the commodity department today. So we'll wait until he calls up and see what he has to say. Anyway, we were talking about Pando and, of course, Lyft and Uber. There's becoming quite a cadre of people in the Silicon Valley, San Francisco area who, for some reason, believe that they are beyond reproach. I know this has gotten a few people in fairly tough issues. And, of course, I'm trying to remember the guy that is now in 2.5 Men. I'm trying to remember his name. Yeah, I'll think of it in a minute. Ashton Kutcher. That's who it was. But these people that are on blogs, of course, no one's checking any of their facts. They just keep repeating the same thing. And you really don't know whether or not these people that are constantly, I'm going to say it in that there was one article, I think, written where these people that are at Uber and Lyft were accused of having their drivers, because they've got the phone numbers of the people they pick up and they've got the addresses of the people they pick up, were accused of hounding the better-looking girls that they picked up. So these guys that were driving these girls around tried to hit on them. And I guess there was one case in which this actually did happen. A driver was fired. But then it took on a life of its own, almost like our Mr. Jello out there, who one person 40 years ago says that they were raped, and suddenly you have 40 people say that they were raped. And my guess is that 39 of them lied. And it's rather doubtful where the original claim came from. But then, of course, one of the CEOs opened his big mouth, shouldn't have said anything, and said he was going to check these, quote, quote, journalists out. You know, I think I have the right to my opinion, but the question always is, who watches the media? And especially if you're at like a CBS or an NBC or ABC or Fox, you have advertisers, and because of those advertisers, if you continually go out there and tell lies, it's going to be problematic. Dan Rather comes to mind. Basically, everybody knew that he had kind of an agenda for a long time. He came out and blatantly lied about paperwork during an election trying to get a sitting president unelected. And it basically, when you show him the facts, he still basically stubbornly says, but it's real. I know that's exactly what happened. I just can't prove it. The document may be forged, but the story's still real. Well, unfortunately, the entire story had to do with that document, and the document was forged. You just can't keep pushing that kind of thing down the road. And I think the frustration these guys in Lyft and Uber are having is basically a pack of jackals, and they have nobody to answer to. And I think what we're seeing out there is a lot of that. There's another moron out there that's yelling for the CEO to quit. And what is he? He's a guy with a bunch of Facebook followers. So it's almost become kind of a McCarthyism out there for whatever your own personal agenda is. And I can see it. It is and does become problematic. And the question is, if you're a blogger or somebody like that, who actually watches the watchers? And, of course, are they impartial? And at least, hopefully, there's supposed to be an editor somewhere, but not in these guys. And come to find out, I guess, what the Lyft or Uber guy, I think it was the Lyft guy, found out was that one of these people that was basically telling people that everybody would be raped if they got in a Lyft car or Uber car, forget which one it was. Her dad was a taxi driver, or his dad owned a taxi company or something like that. There's so many conflict of interest, and of course no one is able to go back and look and watch and investigate the people that watch. Well, that's probably one of the worst ideas at all. Yeah, he does. But those guys are on, basically, somebody in the den said, There are a few people that actually are media pundits, but those guys don't go and try to figure out whether people on blogs told the truth. Most of the time, you're watched fairly well if you're on a major television news outlet, and people will pick up on your biases, much like Dan Rather. When he told the big giant whopper, and everybody figured out within hours that the font that the letter was written with didn't exist at the time and didn't exist for 8 years later. Once that got around, you basically had it busted. I don't know if he would have been busted if there wouldn't have been social media. The problem is, of course, nobody in social media gets watched by anybody else to any extent, and I think that's what they were really talking about. But it is becoming a bigger problem out there that the agenda of a bunch of malcontents, without real jobs, without any advertising, it's almost like the .com days where I've got so many page views or hits, and therefore I have power. And I think Kardashians can get away with it, but I think it's much tougher for these folks. But of course, a big bomb thrower like this creates a lot of press, and then gets other people sucked into it, like senators asking what you're doing with the data about people that move around, people that go places. Probably a better discussion than whether or not some guy decided he was going to hit on a girl that he thought was pretty in the back seat of his car when he was driving her. But probably good to put a policy in place that you don't do that. So, but I don't see, it doesn't seem to me like anybody lost an arm or an eye out of this whole deal. But on a light news week, they can continue to keep it going. I think that you have the right. Somebody asking that in, how do you hold bloggers accountable? I think if you're a company and you get maligned, you have the right to go after them and find out what's happened. But it's tough. But what can you say? Yeah. I think you have to be able to do it. And the almost McCarthy way of calling anybody a communist that wants to check on something that they wrote about them, I think the watchers have to be watched. We'll watch that in the near future and see how it shakes out. But this wasn't a deal where these supposedly bloggers or journalists were white as snow. A lot of them are fairly shady, and the question is whether or not some of these guys are getting paid off by one or the other of these taxi services to smear another one. It was, and still is, very not as uncommon as you would think that newspaper reporters don't make a lot of cash, and they can get paid off to write an article with an opinion and an agenda. It is not new. Normally when they do that, though, there is an editor to stop them. So I'll take a look at that. Anyway, let's start looking at some charts out here. We had kind of a, what do we have? I wanted to go back here and look at some of these. TFNN, go back and look at some of these tests. I'm probably going to talk to Andy Heck about this if he does call in the first segment of the 4 o'clock hour. But kind of looking at some of these companies, it certainly looks rather light for Archer Daniels Midland ADM. A light volume test back up here at the highs. I don't think this is going to roll back over, but it certainly doesn't look like a lot of these stocks have a lot farther to run. In ADM, the September 18th high came in at, what is that, $52.36. And we've gone over that by about 30 cents yesterday. But just 2.8 million shares. Light volume today, 2.6 million shares. So it doesn't look like we're going to break out with a lot of volume. Another one out here, I know Andy wrote an article about Cliffs Naturals. And, you know, the whole steel business out here doesn't look real good. AK Steel out here did have a little gap. That gap happened with some volume on the 17th of October, about 25.5 million shares. Came back and tested it yesterday with 18 million shares, and you get a little bounce out of it today. You know, I think you still have to think that most of these steel companies, most of these people that are in iron ore, are going to come back and test their long-term lows, which is October 15th at $15.14. Excuse me, at $5.14. That high volume low is still out there and has not been tested. Avago is another one. What else do we have out here? Avago, of course, in the Apple supply chain. Apple will go to that one next. But I wasn't real surprised when Apple bounced off the highs this morning. It really looks tired out here. I don't think it's going down, but it looks like it's going to be very hard to get a lot of people in this again. September 19th, $90.88, 4.1 million shares. This thing came in with 2.0 million shares, so less than half. And of course, these guys, if I remember right, make a lot of chips and I think some of the RF part of the chip. I'll look at this during the break. But, energy's not bad on the way back up. We've talked about this before. There isn't a lot of clues out here to say that these stocks are going to fall apart before the end of the year. But certainly we are running into the upper end of what I thought was possible, which was about 2070 on the S&P cash. And a lot of these stocks, even the strongest ones off the last bottom, are looking that way. Another one out here is Catamaran Corp, CTRX. This one looks like it's done just about everything it's going to do. But again, I think these things can kind of drip, drip, drip up a little bit higher. This one had, of course, a huge gap down that started the downside on the 27th of February. And that was on, monstrous volume, 18 million shares, is that right? Yeah, 18.6 million shares. Got into it on September 8th with 1.4 million shares, 1.2 million shares. But, you're just basically coming up in a lot of these stocks and filling the gap. These are the stocks that I'd be watching very closely at the first of the year. If these people are back to getting their cash, it may be very tough to get any higher and problematic. D.R. Horton out here, another big kind of a day for some of these. This one has gone back over the previous high. Kind of an interesting move out here. Let me get a quick quote on DHI. Yeah, 25.57 to 25.94. Another one of these suffering from a bad tick today. What do we have? 25.94. So we did go above yesterday's high. We've certainly gone above the July 2nd high on DH Horton. You needed 14 million shares. And what do we have today? 5.6 million shares. So to me, we're looking at a lot of these stocks. The energy down is the same as the energy up. And your volume drops out at the high. Pretty good signal, I think, that we're in a broader range out here. And that broader range is probably a big trading range. What do we have? October 15th, $7.74 on Diana shipping. This one actually looking rather interesting. To me, at least, it's one of the few stocks that's coming back in with lighter volume to the support level. I would have liked to seen a little bit lighter volume and maybe a rally with especially the last few big moves in the market. We haven't gotten that in these bulk shippers, but it is lighter. So it's not heavier. But still, these things don't look like they have any juice to get up and go anywhere. May not be going lower, but don't see a lot of move out that. We'll look at Express Scripts when we come back in GoPro. Give me a call, 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, Life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, getting into the home stretch of the show, in the next hour, of course, we have the one, the only, the Steve Rhodes. And he'll be doing the next hour. And then, of course, in the 4 o'clock hour, we'll be talking nothing but technology. And it'll be interesting. Of course, the first 20 minutes, we'll do a wrap-up of the day. And hopefully we'll have Andy Hick calling in and telling us about the week in commodities. And I've spent a lot of time lately talking to Andy about some different stuff, talking about his articles on Seeking Alpha. So I always look forward to that. I always learn something. I'm not a big commodities guy. I like that addition to TFNN rather good. He actually told me that they had quite a time last night, him and Tommy out there in the Sin City, but we will see. Other things going on. We wanted to talk about GoPro. I want to get to that while we have time, and we will do that. GoPro back down again. And, you know, a lot of times you have an idea. I think I brought this up before anybody brought it up last night. But it's always good to see people, especially smart people in the industry, bring up what my first reaction to something is. And it certainly looks like several of these companies continue to race to the exits and try to cash out as much as they can. GoPro, of course, came out, said that they were going to sell some additional shares 3 days ago. And market kind of, we didn't like it, but no big deal. Now, Wednesday night, it did come out that they were going to sell it way below the going price. So that dilutes everybody in that marketplace. But why do you sell way below the current market price? And that's because you don't have somebody that would buy it at that market price. And, of course, you've got lockup coming up the 23rd of December in GoPro. But I'm seeing not just this in GoPro, but so many other companies that it makes me think that a lot of these guys think that the end of the gravy train is over in a lot of these recent IPOs. One of the other ones that I saw, and I haven't seen how it looked today, that looks kind of similar is Loco, which is El Poco Loco. And these things have wild trading ranges out here. And, of course, that's from the sliver deals. We talked about that many times out here. This one's just bad ticks everywhere in the market out here because of the a mess up in the morning. But $28.05 to $29.43 is the real move out here in El Polo Loco today. So it's down 24 cents, no big deal. But a lot of just horrible bad ticks. So this chart not really giving us the true skinny on this. But we have to watch these. You know, I think right now, if you're looking at any of these stocks, what you want to be looking at first is the short interest in it and the lockup date and how many shares are available, because a lot of these things are going to be coming out. And they're already starting to sell off before these shares come out. And, of course, then like both GoPro and El Polo Loco, they are already pushing out shares of stock already. Makes me think that the market's probably extremely well valued, and they think that they would have a hard time pushing these out later. And maybe that's a hint of where this market's going to go. Anyway, hang on for Steve Rhodes. I'll be back in an hour. We'll talk nothing but technology. And I've got the deal of the day that you want to check out for technology. There's some great deals out there. We're going to talk about that. See you in a bit.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.